Hey guys, it is Julie here with TipRanks. In today's video, we're taking a look at two stocks that are rated strong buys from analysts, but have a heavy short interest. So let's get into it. Alright guys, welcome back and thank you so much for being here. Today we're taking a look at two stocks that have some very differing opinions on them. On one hand, they have been heavily shorted in recent months, but on the other, they have strong buy ratings from analysts. So we're going to take a close look at what these companies do and what has the analysts feeling so optimistic about their future. Just before we get into all of that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Okay, let's dive right into these two heavily shorted stocks. Up first on our list today is a company called Corsair Gaming. Trading under the ticker CRSR, they're currently priced at $29.65 per share. Corsair Gaming is, of course, in the gaming industry. They are a major manufacturer, developer, and supplier of high-end PC gaming gear. The company markets a range of peripherals, streaming equipment, smart ambient lighting, headsets, and more to gamers of all stripes, as well as content creators, hobbyists, and PC enthusiasts. In addition to peripherals, the company also offers computer gear such as case cooling, power supply units, memory chips, and solid-state drives. Corsair's products are sought after by both casual gamers and professional players. Corsair saw a mix of both tailwinds and headwinds during the pandemic this past year. Lockdowns and social distancing caused an increase in demand for their products. However, their supply chain could not keep up with this new demand. Amidst all of this, Corsair went public back in September of 2020. They released 14 million shares on the market at $17 per share. The IPO raised them $238 million. Just last month, at the beginning of August, Corsair released their second quarter earnings report, which marked their fourth earnings report since becoming a publicly traded company. Their $473 million in revenue was down 9.8% sequentially, but up 24% year over year, and came in for a 40% two-year compound annual growth rate. Their earnings per share came in at 28 cents, which was the lowest reported value since their IPO, but was up from 26 cents in the year-ago quarter. Their adjusted EBITDA came in at $52 million, which was a 4% year-over-year growth. Corsair has seen a great deal of short interest. More than 30% of the company's recent trades have been in short trades. One analyst weighing in on the Corsair stock is Michael Pachter from Wedbush. He says that Corsair has created a defensible niche in what otherwise may appear to be a commodity business. Unlike many of its larger competitors, Corsair is firmly focused on the gaming segment, with the vast majority of its sales coming from a small but dedicated and growing base of hardcore gamers. Corsair is likely to average 10% top-line growth for the next several years. There is potential for substantial upside to our estimates if Corsair can deliver operating leverage. The Corsair stock does have 4 current analyst ratings, and it comes in as a strong buy based on 3 buy ratings and 1 hold. The average price target comes in at $39 per share, which would be a growth potential of 31.5% for this next year. On the low end, we do have our hold rating at $31, which would be a 4% upside, and on the high end, we have Michael's rating of $45, which would be growth of over 51%. The second company we're looking at today, we go to the biopharmaceutical industry with Heron Therapeutics. Trading under the ticker HRTX, their shares are currently priced at $12.18. Heron Therapeutics focuses on easing the discomfort suffered by cancer patients following their chemotherapy treatments. They've developed drugs that treat both the pain and nausea most commonly felt by cancer patients, with the aim of improving the quality of life during treatment. And in this niche, Heron has been successful. They have 3 approved drugs on the market currently. Sustol and Cinvanti have both been approved for nausea control and are on the market. Heron Therapeutics had a major catalyst earlier this year when ZynRelief, a pain management drug, received FDA approval for commercialization. The company has already made an agreement with Medicare for a temporary billing code on the drug and has commitments from multiple payers covering over 86 million commercial and Medicaid lives for reimbursements on ZynRelief. ZynRelief is also approved in 31 European countries. Moving forward, the company plans to work with the FDA to expand ZYNRELEF's indication as quickly as possible, continue to grow their oncology care franchise sales and profitability, and submit an NDA for HRTX for postoperative nausea and vomiting. During the first half of 2021, the company realized about $42.5 million in combined sales from SUSTOL and CINVANTI. Now, this was down from $49.1 million in the first half of 2020. Demand for CINVANTI increased 22% from Q1 and for SUSTOL by 108%. These gains were partially offset by lower selling prices. The company expects Q3 sales of these drugs to increase between 5 and 10% sequentially. Now, despite these growing sales, the stock has attracted a fair bit of short interest, making up nearly 29% of their recent trading activity. But one analyst who's feeling bullish on the stock is Brandon Folks from Cantor. He says that we continue to believe Heron stock offers investors a favorable risk-reward at current levels. We remain bullish on the peak sales potential for ZYNRELEF, even if we expect a measured launch near term. The chemotherapy-induced nausea and vomiting franchise continues to grow, albeit at a revised trajectory. With this growth in the CINV franchise and strong early ZYNRELEF launch metrics, we believe the company will drive value for investors. Once again, we have 4 analysts that have a current rating on the stock. However, this time it comes in as a unanimous strong buy. The average price target would be $27.50. That would mean a growth potential of 125% for this next year. Looking at our price targets, they're all fairly high up there, the lowest being a 96% upside, and on the high end we have a $35 price target, which would be a 186% growth potential. So there we have 2 stocks, both with some high short interest, but some very bullish outlooks according to analysts. So what do you guys think? Do you think there'll be a short squeeze in these stocks' futures, or are the shorts going to come out profitable? Let me know your thoughts in the comments down below. I always love hearing from you guys. Please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Please make sure you're always doing your own research and due diligence before making any investment decision. Thank you guys all so much for watching. I hope you have a fantastic day, and I will see you back here next time.